some of the most positive content that we have available right now to eradicate some of the fears that home buyers are going through. And it's normal, there's a lot of things going on. But let's get down to the nitty-gritty of the content. This webinar is for you if you are looking to buy, sell, refinance, and you're afraid of a housing crash. You don't know. There's a lot of uncertainty right now in the market, and this webinar is designed to get rid of that uncertainty. Number two, this webinar is for you if you want to buy a house, and again, you have the fear of losing your job. I have good news for you, so stay with me. I'm going to show you how you can buy a property and not run the possibility of losing it depending on how you do it. So stay tuned. Number three, I'm going to show you how to buy a house even if you have less than perfect credit and need down payment assistance. All right. I'm going to be talking about market updates, what's happening with the coronavirus, how is that tied into the real estate market. I'm going to show you the smart way to buy during times like this. I'm going to show you recent government laws that have been passed that is completely stopping foreclosures and evictions on FHA loans, okay? And I'm going to show you what is the impact of the 0% federal cut rate. How is that impacting home buyers and actual homeowners that are considering refinancing a property in these times. So my job is to teach you as much as I can in the limited time that we have together. At the end of this webinar, you are going to have the ability to book a free, no obligation consultation so that we can answer any specific questions that you might have. And I'm also going to be opening the lines. If you register to this webinar, you're going to have the opportunity to submit your questions. I have Cesar Serratos here. He is my director. He's going to be collecting the different questions in the different media channels that we're going live. All right, so without further ado, my name is Jerry Torres. I've been in the business over 17 years, and I have seen the good, the bad, and the ugly of the market. So the good news is this market is nothing compared to 2008. I don't support any political party, to be honest with you. But one thing that we have seen is the leaders in this country being more proactive, Congress, the president, passing incentives, injecting $700 billion to buy treasuries and private mortgage securities to be able to continue stimulating the economy. Unfortunately, the stock market right now, it's suffering, it's hurting, but something's got to give. So we have to continue moving this economy forward, and real estate is one of those driving forces. Okay, so I love educating. I love to have live events and webinars. Right now, we cannot have live events because of the social distancing. But we can reach out more people through these ways of communication. So what's happening in the news? Let's talk about the rates. All right. So if you go to Google and you Google the rates, you're gonna see right now that the rate for a 30-year fixed loan is at 4.11 APR. For a 15-year loan, it's 3.310 APR. So a lot of people might be wondering, what happened to the 0% mortgage rates? Didn't just the Fed drop the prime rate? So how come I cannot obtain a 0% mortgage, right? And that's a fair question to ask, okay? So please allow me to educate you a little bit of what's happening in the market. And that's true. The Fed's announced the second rate cut actually on March 15. Now they dropped it to 15%, right? March 15 to 0%, I'm sorry. But previously on March 3rd, they reduced the rate by 50 basis points. So now, how come we haven't seen those rates? How come we haven't seen everything that the government is doing, the injection of capital in the market, and the reduction of the rates? Well, let me tell you a little bit about what happened. So back in March 3rd, when the Fed announced the drop in rate, a lot of homeowners, they link the prime rate, they link it with mortgage rate. So a lot of people started flooding the lenders. They started submitting a lot of refi applications. And these lenders, they don't have the human capacity to to be able to process all of those refis on time. So because lenders cannot discriminate against sex, religion, so what do to dissuade people from applying for a mortgage with them? They raise the rates. So that's what they actually did. Okay, so now when it comes to rates, okay, the Federal Reserve Board is not directly tied to fixed rates. That's something that you have to keep in mind. The prime rate is linked to variable interest rates, such as home equity lines of credit or credit cards. Have you guys ever gotten an offer in the mail saying pay no interest in 18 months? Well, credit card companies borrow money from the Federal Reserve Board, and they have that ability to offer rates at 0%. But that's not the case with fixed rates. Okay, just keep that in mind. Now, adjustable rate mortgages on HELOCs or the 5/1 arms or those adjustable rate mortgages are affected by that rate cut. Okay, moving on. Now, if you want to get a better understanding of where are the current rates for over 50 years, the rates are, indirectly tied to the treasury, to the 10-year treasury. So if you want to see what's doing, Google 10-year treasury, and you're going to see what the 30-year fixed rate is doing. Or okay, so for educational purposes. Now, I went to Freddie Mac and I searched for the average rate in the whole nation as a nation. And today the rate is 3.65%. This is coming from Freddie Mac. Freddie Mac. Now, this is not the APR. I am not factoring in the closing costs in there. That's why on the first slide I showed you that it was at 4.1% APR. Okay, I would like to make that clear. Now, last year, during these times, the rates were at 4.25, close to maybe 4.5% APR or close to 5%. So regardless of what's happening in the market right now, it's a good time to lock in a 30-year fixed payment. Now, I know there is a lot of fear in the market, but one of the things that these low rates have created is affordability. Compared to 2018, 40% of the families in the United States can actually afford to buy a house. Now, and the other good news is that affordability it hasn't been that affordable to buy a property like in these times. What do I mean by that? Right now, if you decide to buy a house, 15% of your income goes towards PITI, towards the mortgage payment. Now, the historic norm is 21%. So it is actually more affordable to buy a house in these times. Good or good? All right. Now, let's talk about the elephant in the room, the coronavirus. How is the coronavirus affecting or impacting real estate? A lot of people, there is a lot of fear. And there is a lot of memes going around the internet, saying the conspiracy theories that, who's behind the coronavirus? Is it charming? Is it, you know what I mean? But there is at the same time, there is also valid fears, what happens if I lose my job completely? What can I do? Right now, there is a lot of opportunities to apply for what you call it, EDD. I forget. Anyways, now people have the fear of losing the houses in foreclosure, and a lot of people, they're afraid of not buying a house because the properties might drop in value. So let's go over one by one and see what are some possible solutions to these fears that a lot of people is experiencing. Number one, the fear of losing your job. That's a valid concern. Believe me when I tell you, it is a valid concern. Now, the good news is, and this is the smart way to buy a property during times like this, buy a property with an FHA loan. Why? Because an FHA loan allows you to apply for a forbearance, and you have the ability to stop your mortgage payments for up to 12 months. So that's on the positive news. Now, I have better news, and this news hit the media actually yesterday. The Federal Housing Administration indicated enacting an immediate foreclosure and eviction stop. There is no foreclosures for the next 60 days, and this is according to the FHA. on FHA loans. I like to make that clear. So if you have an FHA loan, the Federal Housing Administration, is doing everything possible to avoid, a meltdown like in 2008. And this is just one of the things that is taking place. Okay. So now, if you want to find out the news, follow this links over here. So no evictions in the next 60 days. And we got to thank our leadership, I mean, I'm saying everybody as a whole for being more proactive. I mean, we can totally see how, this is nothing like 2008, because I think as a nation, we learned that we have to take action in order to avoid even more trouble. Okay. Now, this is another word that you're going to be seeing in the news: recession, recession, recession. Are we going to have a recession? I've been saying, through these webinars that a lot of the economists, they were projecting a recession by the end of this year, 2020. And that was without factoring in the corona pandemic, okay? So now, are we going to go through a recession? Chances are there is a big chance that yes. Now, will property values drop because of a recession? Well, nobody really knows. It's very premature to say, but let's study what happened in the previous recessions. In 2008, property values did drop, close to 20% because that recession was linked to the housing, to the mortgage. Nowadays, it's nothing like 2008. Why do I say that? Because right now, it's actually, if you can say, hard to obtain a mortgage. Before, people only needed to have a pulse and they would qualify. Most of the mortgages out there, they are on a 30-year fix. So we don't have adjustables like, prior to the big crash. And that's why I can say that who knows if property values are, properties are going to go down. No, actually, there is a lack of inventory right now. We're going to go into that right now. But now, in 2001, during that recession, property values actually went up 6.6%. In 1981, they went up, and they went up in 1980. So, again, the conclusion: a recession does not mean the property values will go down. Now, this is the real problem right now in real estate. We have a shortage of inventory. And with the coronavirus, some sellers have taken the properties off the market. So we need more properties in the market, guys. And I know there are things that you can do. I mean, for example, if you have an open house, after the open house, take your white piece and do whatever it takes in order to keep your family safe. But we need more properties to hit the market. That is the reality. We are still experiencing bidding wars on the properties because people need a place to live. There is a lot of young families that they need a place. They're starting families. And so if you want to sell a property, do it for the economy. We need to keep the economy going. And real estate is going to be that driving force because unfortunately, right now, the stock market is not doing very well. Okay, moving on. So being a homeowner has its benefits. Equity, the average appreciation rate is 3%. So regardless of the ups and downs of the market, you're gonna at the end of the day, you're gonna be a winner, and you're gonna be started, you're gonna be accruing 3.3% appreciation. Profit, the profits in real estate, you could have up to $500,000 in profits as a married couple if you have lived in that property 2 out of 5 years and not pay not even a dime to the IRS. There are some tax benefits. You can write off up to $750,000, okay, of mortgage interest. So there are some benefits to that. I mean, talk to your CPA, your accountant. Investment, it's a good way of having building a portfolio. All right, sorry about that from the current slide. Okay, hold on. Okay, we're back into this. Okay, moving on. Okay, so now, what is the recommended home buying process? Number one, you need to get pre-qualified with a loan originator. Once we have you pre-qualified, we're going to be giving a pre-approval letter to a realtor that is going to be taking you out to see property. Once you find a property, you're going to be writing offers. The offer gets accepted, then we open what is called title and escrow. Title is a neutral, it's a party, it's a company that will ensure that the title of the company belongs to the actual homeowner, And escrow is a neutral third-party company that would make sure that everything in the contract is done according to the law. Now, in order to avoid surprises, your realtor, the good realtors do, they will recommend you to hire a home inspector because you want to make sure that the foundation is good, that you don't have a leaky roof, that the electrical panel is in compliance, so you have no surprises when you move in. Now, as your loan originator, my team is going to order what is called an appraisal. That's a company that will make sure that the value of the property is there, that you're not overpaying for the property. Now, there are different types of loan programs from people that want to buy a $5 million home or a $15 million home. Those are called jumbos. Anything that is above the first-time home buyer limit, which is right now in LA County, 765,600, will be considered a jumbo. Now, if you want to buy a house as a first-time home buyer, the FHA, remember, that's the smart way of doing it right now. I'm going to show you how you can do it by receiving down payment assistance. Now, if you have 20% down, no problem. You don't want to have mortgage insurance, buy with a conventional loan. That's going to be the better deal. Now, for those of you that have served this country and are veterans, we have the VA loan, 100% financing. Typically, the closing cost is lower than an FHA loan. And for those of you that are 62 years young and above, we have the reverse mortgages. So that, I mean, if you need to supplement your income, you can always apply for a reverse mortgage. Now, how can you buy a property even if you don't have money for the down payment? Is that even a possibility? And the answer is yes. Now, the CalHAFA, this is a California entity that offers down payment assistance. Now, CalHAFA used to offer 3.5% assistance, okay, for the down payment. They recently dropped that number to $10,000. Nevertheless, those $10,000 can help you up to $10,000 depending on the sales price, okay, can help you pay or cover a good portion of the closing cost. So now keep in mind, the CalHAFA is your typical FHA. So you're going to have a first lien position FHA loan for 96.5% of the value of the property. Now, the down payment assistance, this is going to become a silent second. I mean, a silent second means that you have the ability to make a payment, but you don't have the obligation to do so. Now, if you need more assistance, CalHAFA offers a ZIP loan, zero interest program. With that loan program, you can receive, depending on your FICO, up to 3% in closing cost assistance so that you can buy a property with little money as possible. Now, with the CalHAFA, you can buy houses, condominiums, and PUDs. Unfortunately, with this loan program, you cannot buy units. You cannot buy a duplex or 3 to 4, okay? Now, the FICO requirement is 660. You need a 660 FICO in order to buy with the CalHAFA. All right, now, for the wonderful people, police, nurses, firefighters, for those public servants that are keeping the nation safe right now, we have a program through the Golden State Finance Authority that helps you with up to 4% in down payment assistance. This one will cover the 3.5%, and the other 0.5%, you can use it to pay for some of your closing costs, okay? Now, for the rest of this beautiful country, United States, there is the Chenoa Fund, and that is a down payment assistance that will help you with 3.5%, okay? Again, a silent second, it's fully amortized, okay? Now, the good news about the Chenoa Fund is if you make your payments on time for 3 years, get what? That loan is forgiven. It's not the same with the CalHAFA. The CalHAFA is repayable, okay, when you refinance or sell. But with the Chenoa, it could be free money if you make your payments on time. And the other good news about this program is that you can buy 2 units. And the score is 6, you can buy with a score as low as 620 for 1 unit and 640 for 2 units. Good or good? Moving on. So now, when you make a decision to buy a house, the lenders, all lenders, are going to look at 3 factors. And keep in mind, I am a broker. I am a mortgage broker. I work with over 132 lenders. What does that mean to you? It means better rates, better terms, all way, every day. I am not tied to just one direct lender that only gives you one or three loan programs. I am a mortgage broker. Good. So now, in in all of the 132 lenders that I work with, all of them are going to look into three things, especially if you want to obtain down payment assistance. Number one, legal status. They want to see that you have a legal status, either that you have a citizenship or green card, or that you have asylum, or that you are a refugee. Now, what if you don't have a legal status in this country? What are your options? Well, if you want to buy a property that is below $300,000, we have a very good ITIM program in which they will finance up to 90% of the property value. Now, if you want to buy in LA, it'll be somewhat challenging finding a property at 300,000. If that's the case, they will finance. There, I have another program that they will finance you up to 85%. Now, with the ITIM program, you don't have to have a green card. You don't have to have a social security. As long as you're a good citizen and file your income taxes with that ITIN, you are good. You can buy condos, units, and even properties that wouldn't typically qualify with the standard FHA and the other programs. They will qualify because this is private money. All right. Now, the second factor that all lenders will look into a borrower before giving a pre-approval is income. Lenders want to see that the income is predictable and verifiable. If you're an employee, they're gonna want to see the W-2. K-1 for the corporate owners that own property or schedule lease. For the landlords, 1099 INT. If you're a private lender and you lend money to people and you get interest, you know, you can use that income as well. 1099G is for my professional gamblers that have consistent income. Actually, the casinos are closed right now. Okay, other sources of income, overtime, bonus, second job, seasonal, retirement, everything helps you qualify for a home. Now, for my self-employed people, a lot of lenders, they don't like to work with self-employed people. I love dealing with self-employed people. Why? We have a lot of good programs for you, like the bank statement loan program. With the bank statement loan program, if you have no taxes or you don't want to show your taxes, I don't want to know why, you could buy a property by showing between 12 to 24 months of bank statements in lieu of your income tax return. Obviously, the 24 months will give you better rates, okay, because it shows more stability. But I mean, if you have one bank statement, I can work with that. If you have three, I can work with that. Obviously, the terms change a little bit. Now, with by showing 12 months at least, you can buy up a property up to $5 million with a FICO as low as 600, and they will finance up to 90% of the property value. And the good news is the bank statement loan, you can use either personal income, or if you have a company, a DBA or a corporation, you could use business income to help you qualify. You can buy properties that you tend to occupy, second homes, investments, possibilities are endless. And you can even buy a property with recent, when I say recent, within the last 2 years, foreclosures, short sales, bankruptcies, or deed in lieu. Good or good. Okay, moving on. Now, you don't have bank statements? No problem. You know, show me the 1099s and you can buy a property up to $5 million, and the banks will finance you up to 90% of the property value with a 600 FICO, primary, second homes, and investment. So look, bank statements for those that, you know, deposit the money and you can show the cash flow through the bank statements. But I don't know if for some reason, I don't know, you don't believe in having bank accounts, but you're an independent contractor, show me your 1099s and we can help you get qualified. Okay, now for my investors, we have what they call a loan program with no job. I mean, for this is for investors. This is not for your first-time home buyer. But we have loan programs called that they use a formula called the DSCR, the debt service coverage ratio. What does that mean? if you have rental property and the rental property pays for itself, you can buy or refinance that property to cash out up to for cash out refi up to 70%. You can borrow up to $5 million if you want to buy another investment property, and they can finance you up to 80%. You need no reserve, which is good. And you don't have to be if you're a first time investor, that's okay too. Now, when I say DSCR, you could even have negative cash flow, to be honest with you, on a property and still qualify buy a property for investment purposes. Now, the third factor that all lenders will look in borrowers is credit. Three numbers are going to dictate, the rate, the terms, whether you get down payment assistance. So it's important to know how to have a good FICO. A lot of people don't know this, but 35% of your FICO is made of your payment history. Make your payments on time, and you should have a good FICO. The other 30% is how much you owe or credit utilization. If you want to have an excellent credit, a great credit, keep your balances on revolving accounts such as credit cards below 30%. If you want to have phenomenal credit, keep those balances below 10% and you should be okay. Now, for those of you that are wondering, well, Jerry, I'm young, I don't know if I can have credit, how can I build my credit? Or I'm a good person, but I went through some bad, things in my life and my credit is less than perfect. What can I do? Well, if you want to build a FICO, if you don't have a FICO, and if you want to build a FICO within 30 days, one of the quickest shortcuts is to add somebody to add you as an authorized user to a credit card. I can guarantee that within 30 days, you're going to have a FICO. Or if you don't have nobody, just go to Capital One and open what is called a secured card, deposit $300. Those $300 become your line of credit. And now within 30 days, you could have, I seen it, a 700 FICO. Okay. Now, the other 10% is length of history. Again, what is the hack? Have somebody add you on a lengthy, credit card. When I say lengthy, a credit card that has been around for a couple of years, and boom, that raises your FICO. Moving on. Now, if you have a low FICO, and when I say low FICO, 580, can you still buy a property? The answer is yes. Actually, with the 580 FICO, you're still considered a first-time home buyer with an FHA loan, and they can finance up to 96.5%. Okay, so that's the good news. Now, what happens when you go below the 580? For that, we have a solution. We offer, if you decide to work with us, we can connect you with different credit repair companies that we trust. And when escrow closes, we're willing to refund you up to $1,000 in credit repair services. Now, you might be wondering, does that even work? And believe me when I tell you, yes, I've seen it with these eyes that it does work. Because there are some laws, the Federal Credit Reporting Act, that law says that before the big credit bureaus, Experian, TransUnion, Equifax, before they enter anything derogatory in your credit report, they need to verify the validity of that information. Now, those companies, they receive millions of entries. Do you think they have the time to verify the validity of that information? They don't do. That's why there is the credit repair companies that they will dispute those things, even if they belong to you, because in this country, you are innocent unless proven otherwise. Okay, so now, if you are tired of your rent going up, if you need space, if you want to buy a house, despite what's going on, again, buy with an FHA loan. You could request a forbearance for 12 months. And right now, there is no foreclosures on FHA, at least for the next 60 days. So you have that peace of mind. So if you would like to have a place, I mean, right now, there isn't a lot of gatherings, but if you want to enjoy your home, it might be a good time for you to buy a house or refinance. Right now, we have, despite of what's going on, we have good rates compared to last year. So if you need to cash out to have a contingency fund, whatever the case might be, it's a great time to do cash out refis as well. Okay, so if you're ready to apply, We don't even have to see each other to have to be in compliance with the law with the social distancing. You can go to jerrytorres.co/apply to meet an online application. And if you don't want to come to my office, that's okay. I can set up a webinar just like this for you so that we can answer any specific questions that you might want that you might have. So again, book an if you have specific questions that you don't like that you wouldn't want to people to know because we're live, you can always book an appointment, and we offer a 30-minute, no obligation consultation. So to get any specific answers. Now, for the people that decide to work with us, besides refunding up to $1,000 in credit repair services, if you need to, we also offer what is called a living trust as a bonus, up to $2,500 value. A living trust will protect your house in the event of death. Okay. If you don't have a living trust, and if your property is worth 300,000 or above, 3 to 4% of the value of the property could potentially go in court fees, and the other 5% will go in realtor fees. Because when you don't have a living trust, the property has to be probated, and a realtor has to get involved. That is, if you died, okay, you went to a better life without having liquid assets to pay for your debt. Again, go to jerrytorres.pro/apply and you can claim your 2 bonuses. All right, so now questions. We are live in different channels. We are live in Facebook, in YouTube. We are live through Zoom. So I have Cesar Serratos. He is my director. He has been collecting any specific questions. So I'm gonna give Cesar the opportunity to jump into the webinar and ask any specific questions that you may have. Fire away. Cesar, do you have any questions?
Hey, Jerry. Yeah, so I have a question here from Stephanie. She wanted to know what the process was called when you halt your payments for the FHA if you lose your job.
It's called a forbearance. So that is the name of the word, and you can Google it. Google forbearance on an FHA, and you're gonna see that you have the ability to stop your mortgage payments for up to 12 months when you experience a hardship, which I mean, everybody's experiencing, a lot of people's experiencing hardships nowadays. So that is the option. Now, if you have a job that, I mean, because the coronavirus is gonna be temporary. This is not gonna last forever, okay? So even if you have a 6-month gap, you can still qualify for a house, for a loan. So that's one option that you have. That is your safety net, one of the best safety nets out there to buy when you want to buy a property as a first-time home buyer using the FHA loan. Do you have another question, Cesar?
Perfect. Yes. I have another question from Chris. He's asking what the minimum FICO score was for the down payment assistance programs.
The minimum FICO is 660 for the CalHFA. So we have different down payment assistance programs. The CalHFA helps you with up to $10,000 for the down payment, and we also have the Chenoa that covers up 3.5, and we have the Golden State that covers up to 4%. Now, but when you do the math, if you live in California, CalHFA is going to be the better deal. But if you're outside California, you can always utilize the power of the Chenoa fund in order to buy a property. But the FICO 660 on the CalHFA, and on the Chenoa it's 620 for one property. And if you want 2 units, that would be 640.
Perfect. All right. Let's see. And I have one more question here. They're asking, what is the difference between the 12-month bank statement and the 24-month bank statement program?
The difference will be terms. I mean, look, depending on your business, if your business has been solid for 24 months, my advice will be to show the 24 months. But for example, if you had a great 2000, a great year, great past 12 months, and not too good in the, after the 12 months, then I would probably just suggest to show 12 months. So it really depends. So the best thing to do is send us the application. You can send me 24 months bank statement, and then I can advise you whether you want to show 12 or 24, depending on which one shows more stability, more income. That's the bottom line.
All right. I just got one more question here from Cardisa Kerr. She's asking how to buy a house one day after bankruptcy. That was her question.
One day after bankruptcy is gonna, okay, so that one is gonna be right now, typically what they wanna see is 2 years of bankruptcy by applying what is called non-QM loans. That means non-qualified. So a non-QM loan, it's a loan that is not insured by the government. So when you buy with the FHA, what they do is it's FHA. It's a federal institution. It's a to make sure that they provide an insurance, and when the loan gets sold in the secondary market, the investors have the peace of mind that the government, in case of a foreclosure, the government is going to refund a good portion of that money in order to mitigate the lender's losses. Now, a non-QM loan, it's not guaranteed by FHA, and that's why typically on a non-QM, the down payment is a little bit higher. It's not as low as 3.5. But the bottom line is, yeah, you have to wait at least 2 years.
All right, perfect. That was the final question.
All right, so thank you guys. I really want to thank you for staying in tune. Let's continue working together, fighting this pandemic. Okay, it's not gonna last for forever. So if you need assistance in buying a property or refinancing a property, cashing out, feel free to reach out to us. We're never too busy for your calls. So thank you so much for being with us, and I look forward to seeing you soon.